journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, this is a chart of a 60-minute October cattle chart. We were going to go short here. I want to send out a heartfelt apology and really thank you for your great help. Tommy Terrific over there in the Midwest called me and said, dude, he said, you got this thing wrong. It's going to go to 235, not 233.80. And I said, no, Tommy, I said, I think you're wrong. And of course, I'm busy doing other things with other commodities and stuff, and I did that right because I looked at that hourly chart, and boys and girls, let's look what happened here today. We went short there at 233.80, but if you look at this on the daily chart, look at this. This is Mother, God, and Country, for heaven's sakes. Look at this. He's spot on. There it is right there, 234.80. And the high was 235.65. So if you sold it there, you're hanging in there okay. But if you sold it where I wanted you to sell it, you're out $300. So make sure your stop's up here above 235.90, and we'll see what happens. But that was my mistake. I went from an hourly and didn't look at the daily, and you can cover more data in here. I just measured the A, B, C, D right up to that level right here. And so whether that helps or not, I really don't know. But we had a really interesting one yesterday on the show. If you remember, we talked about the potential bottom here in the gold market. This was the hourly chart over the last 10 days. You can see we had a double ABCD down here at 33.55, and it rallied $3,500, folks, off that low with a really strong move with no 382 in here except for this little tiny one right there, because I missed that because it was in the middle of the night, and I'm not doing any middle of the night stuff for a while. And if we take a look at this, you'll see this is what happened, because this is where the fat lady sang. Let me get this over right there. There's where the early morning, this one right here, 2360. There's a little tiny ABCD right there. See, it took just about an hour to complete that. And if you looked at it later, not if you were watching it live, you can see it live. It was 1 o'clock in the morning. So anyway, you can see we miss it here by, I think, $1. And then away that it went. And then, of course, we had another nice little pullback here at this level right here. So you would do the same thing and see if it was following the move from that low right back here. You move it up and look right there, folks. What do they call that? Somebody ought to put a patent on that darn thing. That looks pretty good. So let's just look at it from that point and look. We've been going higher and higher, and we've been going higher all day. So this has worked out relatively well. Now we have one other that looks interesting here. If you'll bear with me 1 second here. Got so many of them going on. We got Shane coming on in 10 minutes, but we've got a market that looks like it's trying to change its, well, let's look at the pound first, because this is another one that we focused on last night, because all we did last night was, you can see we had these we had the ABCDs, but look at the 382. Let's just draw these in so you can see them. There's your 382 retracement here in the pound. There, draw it in. There was your first one right there. Market goes down, makes another low, goes right to it again. So hits them both. There was your first 382. There's your second 382, and we're still going down. How much lower? I'm not sure. But with the Fed talking, whatever it is today, tomorrow, I don't think there'll probably be something exciting to happen to it, but I don't know exactly what, and I'm not really interested in it other than how the market reacts to that, okay? All right, here's another one that looks like it's changing some type of direction. Okay, here was the crude oil here for the last couple days. Now, I was not here. I was not here on the 19th. So what I was looking for was a market that would give me a 382 retracement. I think I showed this to you folks on Monday, because we hit that and then we went through it and it went all the way down. Once it breaks that, you see how it held the 382 basically right there. But look what happened after it broke that. That tells you, and remember, this took an hour to complete this, folks. So when you see that new low, what's your first step? Try something new. Try a little bit of 382. Oh, I'm a poet and don't know it. I make it rhyme every time. So here's where we are right now. Let's just clear this up, because I think we've made a pretty significant bottom here now. Now, on the way up here, let's see. This is this morning from yesterday. And I'm just going to draw these in because there was our big move up right here. So you want to find out what the 382 was. And you see it went to the 50% level. And then it came back to, it made a higher high here. So you got to recalculate that. Let's see what that was. We'll just draw that in. See, that's what people don't do, is they don't recalculate the new high, because it's higher than that. That means that cycle is there, and it comes down exactly to the 618, and it looks like we're heading up to at least this area right here, 6321 on this shorter term chart. It's got a pretty good chance to making it. Now, in this action right here that we're seeing early this morning here, there's very little time. There's not enough really to mount an attack on that. So we don't want to mess with that. Okay. All right. Let's move on here for just a second here. Well, keep your fingers crossed, because we're almost even in the October cattle. And I certainly apologize for not getting that out. Now I want to bring up, let me hit window tile vertical. Folks, I send the videos out now, usually once or twice a day. And if you're not getting them and you're subscribed to the stuff, please let me know. We'll try to figure out, what's going on. All right, here is my, me and my absolute best trade of the day, right? Let me get this daily up here right now, because I love this one the best of all. Look at this, folks. We went right and filled the gap right there at the exact 382. Now, it hasn't gone anywhere. It's got about a $60 profit in it, but it did exactly what we thought it was going to do. There's where it went limit bid when the Turkish people said, we have no more soybean oil to give anybody. And of course, the market went limit up and continued to go higher. And then for the last several weeks, it's been a month to get to this 382. Do you know how bullish that is, folks? I don't know if it's going to work or not, but boy, is that a nice pattern. That is really a nice pattern. If we look at this just from repetition, look, we had a really nice move down in that correction, correct? And you go over to the next one, look at that correction. Look at this correction. You see the harmony that's in the soybean oil market? Now, maybe people don't look at that, but, this is what Andrew Lowe did when he was writing his book, The Non-Random Walk Down Wall Street, that these markets repeat themselves over and over again, and they do, just about everything. Well, we see it all the time, but the problem is it doesn't work all the time. It only works some of the time, and therein lies the rub, okay? And rubbing is not so good if you're losing, and you want to lose as much as you can, or lose as little as you can. Main thing to focus on now is to watch the rally here in the NASDAQ. This has been the big daddy rabbit. Now, that's 4 hours. So what you want to do now is go to the hourly, because you're going to be seeing a rally. Okay, all we hit was at 61% so far this morning. Stay tuned. We'll be back with the Shane Man, the Wolf Trader. He'll be right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Okay, folks, this is the NASDAQ from the high we made back here last Friday, if you remember. That's when all those numbers came together. Then we had the big move down equal to the one we had before. But this is what you want to be watching. This is my perspective. From the high to the low, the 382 comes in here at 23426. That's up 400 handles from the bottom. Now we've got the Fed coming out here. So watch that number, folks. If it doesn't pop above, it pops above that number, it could go higher. It could be one of these, well, they don't need a crazy day, but that's what we're looking at. So that's it. Now, this is a very bearish market, folks. If we go below this low today, drop another 250 points from where we are now, and we're already down quite a bit, we are going to go lower. The charts just look so very bearish. I know some of these things look pretty good, but some of them don't. So the real key here is you don't want to lose very much. That's the whole thing of what you're waiting to see. Okay, I'm trying to get Mr. Shane Mann on here in just a little bit, and we'll find out if we can have him working here a little bit, and then we'll get moving on, and then we'll do one thing at a time from that level. If we do it with the Dow Jones, and I don't like the Dow Jones because let's do the bonds, because this is the one that we talked about this before. Get that daily chart up. We had that really nice daily pattern right here. We're now getting a nice run here. It's up over a point now. This morning when I looked at it, I said, boy, this thing better get started. And now it's getting started. So we are hitting that level pretty nicely. Perfect ABCD. And I think with a little luck, let's just double check and see. The Shane Man, the Wolfman's in the house. Trader in the house. Trader in the house.
Is this Duke
How are you,
and Duke?
my friend? Yep, this is it. Duke and Duke.
All right.
Hold on one second. You're in charge, my friend. Please tell us what we're looking at during these times of low volatility.
Absolutely. Right. Okay, so thanks for the extra time today. And I'm going to do my best to kind of explain what's going on in the market behind the scenes, stuff that you're not seeing, that people aren't seeing, and maybe we can make a little bit of a sense of this, because this is definitely a confusing time with the tariffs and everything going on in the world right now. It's definitely a confusing time, and that should be confusing because Neptune is moving across the Aries point right now, which is the world. Saturn Neptune is actually moving. That midpoint's moving back across 1 degree right now. It's going to go across the world. So it makes sense that we're in these kind of, nobody really knows, why is this doing this? Why does the market keep going up? I've done all my work. I've done my wave counts. I've done these counts, and it just keeps going up. Why does it keep going up? So I'm going to give you my perspective, and hopefully this can at least help people make a little more sense of what's going on. So again, this is my perspective, but this is what I do. This is what I'm known for. I study the Fed, the Federal Reserve, and how they influence things behind the scenes that people can't see. So again, hopefully this can help us get a little bit of a perspective here. So we're going to start out with the Fear and Greed Index right now, which is pretty neutral. It got up to these extreme greed levels, and it's just kind of pulled back, but it's nothing really too low right now. We're still in a greed reading right now, and I want to point something out, and I'm going to try to go into a little bit of just kind of like philosophy today. But we have two basic types of forces in the marketplace, and people may not realize this, but there's two basic forces. Hopefully we can see this. Let me try one more time to draw on the screen. There's two forces here that we're dealing with the market. And the first force is what we're going to call the natural forces. And this is going to be dealing with things that are just general market participants. We can look at cycles. We can look at things like the Fear and Greed Index. We can look at things like sentiment, things like this. And these forces dominated the markets really for the good majority of the time until we got to around the Great Recession. And the Fed started messing around with, there was actually something called QE0, which people don't realize. This actually happened in October of the 2008. They started messing around with the bond market. They started buying the bond market, and they noticed one thing when they did this, and I plotted this out, the data out. The market stopped going down when they did this. So that was really like the dry run for what was to come in this March period, where all of a sudden we saw these market lows. And Larry, you were excellent at tracking that with you had tracked that with to the day, I think, Larry. Didn't you track that? You were like within a day or two of tracking that on the March 2009, right?
In the last 10 years, I've hit one or two of them. That might have been one of them, so who knows?
So, well, I'm talking about the March 2009. So we were in this transition phase around that time where we were transitioning from all natural forces. Now all of a sudden, here comes this behemoth coming in to the tune of trillions of dollars. And this was the Federal Reserve. And so we started to see, this was QE1 started. We had this whole phase of these QE cycles, and they would stop, and there would be QE, and then they would stop. And what I noticed was during this time, all of the cycles and transits, things that we would follow when the Fed really got strong, stopped working. And this was what I would call the first unnatural phase in 2009. And things like sentiment, things like this, none of this stuff worked anymore. Then the Fed would go between these periods of QE, not QE. And we're talking about a lot of money here. We're not talking about a little bit of money. We're talking about trillions and trillions of dollars. And they would stop. And all of a sudden, the Astro would start working, the Bradley would start working, and everything would start working. And I was like, oh, look, we got this again. And then they would start up with something new. Everything stops. So I think this fits in with the theme of AI, artificial intelligence, and the world that we live in right now, because we're really starting to work hand in hand with machines and automated intelligence. And I think right now we have to understand that we really have a balance between these two forces in the market. These are huge forces. If you think back to even when there was the gilt market, they had the issue in the gilt market in Britain, and they came in and just for a few days, they did quantitative easing. This was during the tightening phase, and they moved these huge bond. Larry, you know how big the bond markets are. These are the biggest markets in the world, right? I mean, they're not. Equity markets aren't even close. And they moved these markets like in 3 days, like huge moves, because the central bank comes in and buys this, and then they stopped and went back down. So we're talking about massive, massive forces. We're not just talking about some transient trends or some money flows going in and out of CDs. We're talking about massive flows. And the Fed continued to build this up. So it's not just quantitative easing now. They have all these tools that they do behind the scenes. They started purchasing mortgage-backed securities. They started getting into the repo market. They got into the lending market. They even got into the consumer market with the TALF, which is the Term Asset Loan Facility. And what that means is, like, when you go to buy a car, you get a loan. You think I'm getting a loan with the bank. That's what it is. That's not what it is. These are called asset-backed securities. And so basically people have to bet on your loan. And during these times of trouble, what would happen is the Fed would come in and they would become the backer of these asset-backed securities. And they got into the retail market during these periods. So the Fed's tentacles are ginormous, and they're everywhere. And so I think what we saw was, especially with inflation, when we saw pre-2009, really, it was tied to interest rates. Interest rates would go down, inflation would go up. It was really tied. Since then, we've seen a decoupling of essentially all of these tools now. So they have all these tools they can run behind the scenes, which is what they're doing now in the repo market. And we'll get back to this.
We've got to pay a few bills. We'll be right back, folks, with Shane Smolian, the Wolf Trader.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, we're back, folks, with the Wolf Trader himself, Shane Smolian. Please continue, my friend.
Okay, so we were talking about the these explosion of the unnatural forces, which started around 2009 and continue to this day. And when these forces get dominant, and they cycle. Sometimes they're not. The Fed's not as strong, but when they cycle strong, these other things that we look at, like fear and greed, and maybe you have a wave count, or maybe it's the magazine cover, and you see that it's a contrary indicator. All of that stuff becomes irrelevant. It's basically, these just become hallucinations. You start to see these things. It can stay at extreme greed for like a long period. We saw this during this big run during QE. So this stuff, while if the Fed's weak, it can be important. But if the Fed's strong, it's not important. And so that's the big distinction that we make here. Now, we do still track astro events and cycles. And I'm just going to show you, this is one of the things that we track each month. This is what I call the Cat Master Composite. Now, this is not the Fed. This is these are natural forces. This is talking about we're talking about four major astro and cycles. It's called cycles and transits. That's what Cat means. So we're talking about transits. We're talking about the planetary speed index. We're talking about the solar cycle, which is also the seasonal pattern. And we're talking about the quadlunar cycle. And I put them all together in a graph so everybody can just look at this and say, okay, this is what the natural forces are for the month. It should have been falling until 8:20, right? This is what it is. Like the natural force is set, and the market has been kind of backing off here. We are in a period here of very, very strong Fed activity, but they have backed off a little bit. So when they backed off a little bit, it has allowed these natural forces to kind of come back in. And so I do track plots every month for people to see. It's there. But with a grain of salt, we know that when the Fed gets strong, we really need to be looking for lows into here. And in a normal situation, if the Fed wasn't getting so strong right now, I would say definitely topping pattern, wave counts. I've seen so many cases that are very well-made cases for a top. It's not that people are seeing the wrong thing. It's just like there's something behind the scenes going on that they don't have any control over. And I'm going to show you this. Now, when you first hear this, oh, well, the Fed's controlling the markets. That's nonsense. Oh, this is ridiculous. First reaction from people might say, well, that's ridiculous. There's no way the Fed control. Listen, I thought the same thing too. The minute I saw the data, it's like, holy moly, this is the real deal. I'm going to show you this in a second in terms of what the Fed's doing. But I understand the skepticism of people. But believe me, it's the real thing. And I'm going to show this to you in a second. But these are the natural forces right now. This is the Cat Master. And so we just have to look at this one graph every month to see where we are. We should be backing off based on the natural forces. I think we're still in a general upward trajectory. We're still in a buy two overall. But this is showing us that we should have been backing up. We should be coming back up again here. So that's what's going on there. If we look at some of these upcoming events, I will say that this is a calendar here. There's no Fed meeting this month, right? But there is one next month. And I do think the market, they're going to get crazy. They're going to get really excited because there could be a Fed cut next month. But what we're seeing in these reports, when we see like the core inflation, we see the PPI, we've seen huge reactions out of these markets. And it's getting so crazy right now around these reports because of the tariff situation that we're seeing, that these reports are becoming just almost untradeable around them. So it's getting more and more volatile around these reports. We do have the Fed minutes coming out today at 2 Eastern. We just have GDP this month. Basically, that's really it. And then next month, we'll get into the Fed meeting. The Fed's coming back. Will they cut rates? It's really hard to tell. Some people think that the Fed's just going to be stubborn and they're going to be like, no, like we hate you, Trump. We're not going to do it. Other people say, well, there's real weakness developing here in the jobs market. And we're starting to see some disinflation numbers in spite of what's going on with the tariffs. Now, that tariffs are going to cause a bump in inflation. There's no doubt that will happen. The question is the job market and labor market, is that going to be enough to push the Fed to do something. So I'm going to show you some more of these natural forces. I know, Larry, I know you like this, the Astro stuff. This is what goes into the Cat Master. So going back to this Cat Master here, these are the transits. You can kind of think of this like the Bradley. It should have shown a very strong market's getting excited here until about the 11th and then kind of tapering off here. We also have the planetary speed index here, which we look at, and that is showing a little bit of a backing off now and should be bottoming towards the end of the month. So all of these are kind of saying the same thing. We have the quad lunar cycle just hits this high and should be kind of bottoming. So according to this, it kind of goes along. This is why we put it in the Cat Master. So everybody can just look at this one graph and say, okay, that's what the natural forces are. Now, the problem is, I'm going to go to this chart right here. I'm going to go straight to this chart. This is the problem. So you look at your everything, you say, I do cycles, I do Elliott wave, I do whatever, and everyone's got these great analysis. But if you're not paying attention to this stuff, the market's just going to keep going up. And I made a little video about this on YouTube. I said, look, you did everything right. You did your homework. You're an excellent trader. Why does it keep going up? This is why it keeps going up. So what I have here, and I'm going to show you why this is really an interesting story to tell. I could just sit here the rest of the show talking about just this. Well, let me tell you what we have here. We have here in the background this black graph here. This is the S&P 500. I'm just going to kind of overlay this here. This is the S&P 500 here. And you can see we had this tariff low into here. This is going back into April. And this is when we had that big low. Okay, so this is just the price action of the market. And, most people, they're just looking at price. So they're saying, oh, I'm going to do my Elliott wave here or whatever it is. And I'm going to my cycle analysis, and that's the low. But what they don't see is what's going on behind the scenes. Like, what is the Fed doing behind the scenes? And when you look at this data, it's really quite shocking. And again, I can go back to 2009. And again, I understand the skepticism. If you say to somebody, oh, they're just controlling the markets, it sounds like something crazy. But when you look at this data, it's unbelievable. This is the Fed here. These are what I call the Fed internals. I measure different Fed operations here. And there's a lot to measure now because they're expanding. But this is what the Fed is doing in the blue here. So some people look at this and they say, well, that's some kind of an oscillator on the market. That's not the Fed. No, it's not. This is the Fed. This is data that I get every day from the Federal Reserve. And then we take this data and we make it into another signal called the Fed juice, which is it's optimized off of this between this Fed data and the S&P. But this is why the market has been going up and it doesn't make sense. And why doesn't it turn? And it just keeps going and going because here's what's going on. I don't know the motivation behind this. I'll speculate in a minute. It could just be some kind of a showdown with Trump that they're being stubborn on the interest rates and they're hedging their bets behind the scenes. We saw this type of action during the Biden administration. The Fed changed what they were doing. It took me a while, until 2004. I figured out what they were doing. They had other channels that were coming in. So while they were cutting on the one hand, or while they were raising on the one hand, they were behind the scenes, they were easing. And so this is what we track. We can see this, right? So this is the invisible stuff, right? So in astrology, we would call this the 12th house. This is the stuff that's invisible, right? You can't see this. I mean, you can see it now. I'm showing to you. But the ordinary person is just going to look at a graph and they're like, oh, here's the graph and here's – no, this is what's happening. So right when Trump comes into office here, this is really interesting here. They had been kind of inflating this back up again.
Hold on, we got a couple pay a few bills here. We'll be right back with the wolf trader himself, Shane Smolian. Stay tuned.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back, folks, talking to the Wolf Trader, Shane Smolian. Please continue, my friend.
Thanks, Larry. All right, so right when Trump comes into office here, 2020, this is such an interesting story here. 2025, we're coming in here right into this January period. The Fed starts a 3-month period where they're deflating this. The internals are falling and falling and falling. And now this also went along with the tariff situation, and people blame the tariffs. And this, I think this last spike definitely was the tariffs. But this decline was going to happen with or without the tariffs, based upon this model, at least, was saying that this decline was going to happen. Now, right when we hit these lows here, so this is point A to B, there was a big decline 3 months because the Fed was falling. And I think, Larry, I told you at this period, the Fed was getting weak. When the Fed gets weak, by the way, the astro and the cycles, they start to work again because you don't have this artificial force in here. Then the Fed they got a little panicked in here. You can see this big spike here on the tariff. This is letter C here. And also look at the market down here. This is the craziest thing. The correlations are unbelievable. I mean, you can see that almost to the day that when the Fed acts like this, and even when the Fed pulls back like this, you can see the markets also pull back. It's pretty crazy. I mean, it's like I said, when you start to look at this data, it's like, holy moly, this is crazy. Like, how can this be real? Trust me, this is real. We collect this data every day from the Fed. Now, this is the Fed's climbing here. You can see here into the letter D, they have a pullback here. Okay, the Fed pulls back and the market also pulls back. So we're in a period right now where the market's really sensitive to what the Fed is doing. And so Fed gets worried into here. We're having this, we had a crunch on the repo market. There was a huge surge in the repo market here, huge surge right here. And this is when I rang the bell to people. I said, this is crazy. We are getting into, this was the largest surge since COVID. Now, we're not at COVID levels. Okay, nowhere near. I just want to clarify that to people. We are nowhere near COVID levels in the repo market. However, remember the focus before was the reverse repo market. People had so much money, they were just looking for a place to park it. Now it's the opposite. Why did they do this? I don't know. It could be that the banks were having issues. They really did have lending issues. It could be that they're just hedging their bets. They're being stubborn on the interest rates and they're hedging their bets behind the scenes. Either way, I don't care about any of that. All I care about is that I can forecast what's going to happen here and let our subscribers know, let everybody know, hey, this is what's going on. This is what I'm seeing here behind the scenes. And then what's interesting is you see that it starts to lay down here. There's a little bit of a bend here, okay? And you can see the markets again. They start to roll a little bit here. You can see they're starting to roll. We have a little bit of a jog south here today. But what I'm going to tell people is this: if the Fed continues this, which I think they will, markets, you can have these little jogs lower and whatever, but it doesn't matter what the counts are or what your wave count is and Elliott wave, whatever it is, because I know there's some good Elliott wave people out there that can track this stuff, and it doesn't matter. If they're going to keep doing this, markets are likely to head higher. And again, we're trying to take what's invisible and give it visible to people here. And we're just entering the rate cut cycle, right? So think about this. We're at 4%. Trump's talking about putting someone in to go into 1%. So this is another problem. When you have all these cycles and the interest rate should go here, it doesn't account for the fact that if Trump puts someone in there and it goes to 1, it doesn't matter what the cycle is. They're going to go to 1 and 0. That's what's going to happen. Whether it happens now or in May when he replaces Powell, they're going to replace him, and they're going to put someone in there that's going to cut rates. So what does that mean? Well, when I'm putting the pieces of the puzzle together for a longer term forecast, the first thing I want to look at is the Fed. Where are we in the cycle? We're very, very early. We're at 4. We're still at above 4%. We got to come down to 0. Then the QE. So all these different factors that can kick in. We're just starting that like that. We haven't even really started. Now I've done an interest rate cycle here before, and this was the 10-year interest rates, which is important for consumers, and they still have these crazy consumer rates right now. By the way, like it's like way too high. I think that's how they're trying to control inflation. Like when I remember back during the crisis when they started cutting, I had lines of credit, and it used to float off of the LIBOR, and so I had these lines of credit. They were like 8%, 9%, and they all went down to like 2 because they floated off the LIBOR. And then all of a sudden, the banks just said, oh, no, you didn't see anything there, and they just adjusted everything back to 10. So they're changing the way that they do this. It used to float. It doesn't really float now, right? You look at some of these interest rates now, they're super, super high, like 25, 30%. Why are they that high when interest rates are 4? Because that's how they're trying to control inflation on the consumer front. That's my view on this. Now, this is a 10-year. So this was a cycle that's showing us we were supposed to go down to 2025 and then go up a little bit, right? Which is, we've kind of seen this pause, right? Like Powell has paused, and he hasn't really, he's like, I'm not going to cut, and it's the tariffs. And I think the tariff thing is, I think it's going to cause a spike in inflation, but I think the Fed funds rate is really a nothing burger in terms of inflation. I'll get into that if we have time. But this shows this third wave coming down till 2028. I think that's the new Trump appointment. If this cycle is correct, they're going to put someone in there, and they're going to take rates down to 1 or 0, right? Housing market is going to likely explode. Everything's so you're going to see. I think you're going to see this, and inflation now is very tranched. You have the QE you go to the markets. You have the mortgage-backed securities went to the housing market. It's very tranched and specific now, right? But I think if this Trump's going to put they're going to put someone in there. It doesn't matter what your interest rates. This one does say it's going to go down, but it kind of makes sense that that's what would happen. Now, I want to show you a graph here. I've talked about this before with people. Like, I think this whole Fed funds rate is just a nothing burger in terms of inflation. I'm going to tell you in the modern era. Okay, let me clarify that. In the modern era, since 2009, I've plotted a graph here. So just to show you why I think this is all just theater. What's going on right now with the Fed and Trump? This is all theater, because this is the CPI here. You can see it's going at a steady rate, no change, right? No change in CPI. But here's the Fed funds rate, right? Fed fund rate drops in 2009, stays at 0, right? Stays at 0 all the way or near 0 till 2016. We should have runaway inflation. Inflation didn't change. Then they raise interest rates, right? No change in the CPI, right? Then they dump here during COVID, and you see this big takeoff. So some people might say, well, that's the interest rate going to 0. That's what caused it. No, that's not what caused it. My point is, it doesn't matter if they cut interest rates. It's not going to affect the inflation. It's going to help people. It definitely would help people with some of their loans, refinancing debts, people with debts. But based upon since 2009, there's no real effect of the Fed funds rate because all of this stuff is tranched now. And I'll get into that. Depending upon what the Fed is doing, it's going to affect very specific markets very differently. Now, this is another graph here showing the CPI versus the money supply. This is what's driving the inflation. And so you can see here that the money supply here, this is the CPI here, right? So the CPI, according to how they track it, we all know that they change it so it doesn't go up that much. But you can see here, it's just pretty steady, right? But when you get this big spike here with COVID, this is when you start to see things haul tail to the upside. That's what caused the inflation. And so you had this big spike and then you had this big drop due to reverse repo. So this is all manipulated stuff because it's not even really M2 because they just gave people money, but whatever. Most M2's got to be paid back. It's loans are structured. But the point is, it's the M2. So I think this is all theater with the Fed. I don't think it's going to matter. And I do think rates are coming down. Now, how does this affect S&P? Let's go back to what we talked about here with the Fed here. Fed's strong, likely to get stronger. Interest rates, I'll finish in a second. But
we'll be right back with the man himself, folks. Stay tuned.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, we're in our final stretch with the wolf trading himself. Shane, please continue.
All right, so just to summarize here what we've been talking about, there's natural versus unnatural forces. Unnatural forces are the Fed. They have grown ginormous. Right now, we have a phase where the Fed is accelerating their power. I think this is likely to continue, especially if they continue the standoff with Trump on the interest rates. So I think this is probably some type of a hedge behind the scenes. Long-term forecasts, if this is going to continue, markets are going to likely go up. Regardless of what we're counting and what logical things that we see and how brilliant people are with their forecasting. And believe me, there's some brilliant forecasters out there. If you can't see this stuff, you can't understand that it's there. And so when we look in long-term forecasts and we look at this, and then I'm also looking at my super biorhythms, I do have them both lining up here on around 826, which is in August. So they're both lining up to the upside. So from what I'm seeing here, based upon the Fed, and then we also have the stelliums coming. I think we talked about that, Larry. They're coming in January. To me, those are generally bullish signs. So for now, let's just say, as long as the Fed's doing this, I think there's the potential here to go to the upside. I can understand people's argument for a top, but what I'm telling you is I've been studying this stuff since 2009. We can go back through the data, and the data is telling us they're getting pretty strong into there. We will talk about this on Saturday in a webinar. If you guys want to show up, free webinar. I'm going to expand upon this. There was so much to talk about today, but we're going to talk about this. So, if you want to reach us, you can visit wolftraderfutures.com. You can contact me, Shane, at wolftraderfutures.com. The webinar is going to be free this Saturday. I'm not sure about the time yet. It'll either be 8 in the morning or noon, somewhere between that time, Eastern time. And the YouTube channel is going to be Wolf Trader Futures. So head on over there, sign up for the free webinar on Saturday. We will expand upon what we talked about today. But this is really kind of an exciting time because when we can see what's going on here and the Fed strengthening, it really helps us with the forecasting. Thanks, everybody.
Shane, thank you, folks. Thank you, Shane. We'll see you tomorrow, folks. May God bless.